When we talk about the Montana self-storage market, it's not unlike what many other markets across the country are experiencing. The impact of the capital markets and the 10-year treasury has impacted what buyers can pay for self-storage investment opportunities. That basis point spread is highly sensitive. And so some of the cap rates that were being recorded back in 2020, 2021, when cost of capital was much lower than it is now, has created a large ask bid gap with a lot of deals in many markets, and Montana is not unique to that. We're seeing that ask bid gap close. We're seeing buyers finding funding and working through loan to value ratios that make a little bit more sense to get closer to where sellers still expect pricing to be. We're also seeing sellers settle into where the new normal and realize debt service doesn't make a 4.5 cap or a 5 cap deal work anymore. Lots of deals that we're doing here in Montana include some component of seller financing to them to help get to that price point that makes everybody comfortable. So if you're in a position to offer seller financing, that's a good avenue to explore. It could help you avoid some capital gain, could help you work with a buyer to get to the price point that you want to be. It gives the buyer a little bit of time to find that financing down the road that makes that deal work for them. Vacancy is still super strong. It's dropped here in Missoula. Our occupancy levels have been very, very consistent in Missoula, Bozeman, Billings, most of our larger markets. We saw a little bit of leveling out from the COVID migration rush where we had wait lists and our vacancy was down to 2%. Now we're back up to 5.5%, 6% in some markets. Very normal. We're seeing those seasonal fluctuations happen again. Those are all normal. It felt scary at first because we hadn't had them in a while, but those are back and they're not outside of the range where they were pre-2020. Pricing is tricky in terms of new development because of the tariff impact. We're seeing some steel providers tag on 1% to 2% premiums each month. You wait to schedule a steel order in order to be in front of whatever tariff impact they're going to see. The tariff discussion is very real. For a while, it was a big headline media topic of discussion. We are finally now, actually starting in July, of seeing those tariff preparations and cost premiums hit from the steel companies. That's going to affect the development pro forma when they're looking at building or adding onto a facility. We talked about operating expense fluctuations. This is across all asset classes. Self-storage is trickier because you do not pass operating expenses through to your customers. Raising rents to offset a huge rise in property insurance tax is really challenging. And so it is creating the need for operators to find other ways to get creative to push down other operating expense line items to account for the large rise in property insurance premiums that we've seen over the last couple of years due to fires in many, many markets, as well as property tax rate increases. That's also creating a variation of sellers' view of what their property is worth based on their existing insurance premium and their existing property taxes and what we need to underwrite and plan for when that property actually trades. And so you do your best to prepare for it. It's not always the most fun thing to realize for a seller when they have to come to terms with the fact that a buyer's probably going to take that into consideration when they look at what they could pay for a property. But we're getting a better grip on what those costs, premiums, or increases might be and creating more accurate pro formas from there. The self-storage rental rates have kind of leveled out. We had upwards of 7 to 10% rent growth there. And again, 2020, 2021, because of the large migration to our Montana markets, we are not seeing the rent softening like in some of the Sunbelt states. We've simply leveled out and our rates are holding. We're underwriting a little differently now, using somewhere between 1% to 2% in our pro formas compared to 5 and 7% a few years ago. Climate controlled rents have risen, which is exciting because for a long time we didn't have enough climate product to really track if it was worth building or not. Several owners have taken the risk and done it. It is proving that those rents are growing and that the demand is there. That's something we weren't able to pinpoint a few years ago. That is something that's coming out of this data tracking as we're looking 6, 7, 8 years down from where we started.